Alright children, welcome and a very good morning. I hope you're doing good. And in my last video, we have done one full length sum on final accounts. Now here we are doing just one more sum. Okay, just for a brush up again. So that you get a hang of it again, and I've done this so that it goes quickly also. We are doing question number 15 of DKOL. Alright. So that sum is here right in front of you. Please go through it. The sum says following is a trial balance. The trial balance clear cut gives you debits and credits separately. Of Sri Damodar Prasad as at 31st March 2020, you are supposed to prepare the trading PL account and the balance sheet as at that date, and the stock on 31st March 2020, meaning the closing stock, is 22,000. Again, clearly 22,000 closing stock is given outside trial balance, therefore it is not yet adjusted with purchases. So it will come both in the trading account and the balance sheet. Okay, remember that. So first thing, you will draft your trading profit and loss account for the year ending of Sri Damodar Prasad and the balance sheet as at 31st March. Please write the correct format. Okay. Now let us start. Stock 1/4/19, opening stock. Opening stock is an expense for this year, so it comes here 10,000. Alright. So I keep putting a tick for the amounts which are there. Purchases 58,000, kept in the inner column because later it is given in the sum that there are returns also. Wages. Wages is a direct expense, comes to the trading account. Returns inward. Inward meaning sales return. That is why it is given in the debit also. So you will subtract that from sales. Carriage on purchases meaning carriage inward, direct expense, should come here, trading account. Carriage on sales, on goods sold, indirect expense. So it comes here, profit and loss account. Okay. So whenever you are doing, of course, you don't know exactly how much space you will need. So you will leave maybe less than half for 1/3 space for trading account and 2/3 for profit and loss. Office salaries 4,800, indirect expense, profit and loss. Rent and taxes 2,400. All of these are indirect expenses. Cash, not expense, asset. Cash comes here in the current assets. Okay, I have just kept an informal division between current assets, fixed assets, current liabilities, and capital. Then you have bank balance. Bank balance on the debit side means a positive, favorable balance. So bank balance comes here. Okay. Then you have bad debts. Bad debts is a financial loss to us, indirect expense. It comes here in the profit and loss account. Okay. Bad debts is appearing in the trial balance, meaning it has been subtracted from the debtors already, isn't it? Debtors value has been already written off. Discount allowed. Expense, indirect, comes here. Then you have land and building and scooter. Both are fixed assets. Land and building and scooter comes here under fixed assets. But scooter repairs goes to profit and loss account. Now children, here only we have, if you remember, the difference between capital and revenue items. Capital expenditure is expenditure on assets. The scooter that you have purchased is a fixed asset to you. This will serve you for many years. But when you're talking about scooter repairs, it's a regular affair, If in any asset you have, you will spend some amount on repairs or the maintenance expenses, isn't it? So that is a regular expense. That should be debited to your profits. Whereas your asset should come here. So many a times children jumble up. They put assets here, they put some expenses there. No. Strictly your balance sheet should show only your assets and liabilities. And in the trading and profit and loss account where you are trying to find out profit, isn't it? There you cannot have any asset and liability. It's only incomes and expenses. Then bills, receivables. BR is the short form of bills, receivable. which is a current asset. So we put it here. Then we have commission. Commission on the debit side meaning expense. Yes, all expenses have a debit balance. Sundry debtors, obviously your current asset, they're going to pay you money, isn't it? Interest on loan, X is loan. Now we have taken a loan from X and interest on that we need to pay. It's an expense, so here it comes. Profit and loss. Loan is a liability. Interest on loan is an expense. Because this is interest for this, every year kind of, whatever time you have taken the loan. Loan you have to repay. It's a liability, isn't it? Then drawings obviously should be subtracted from capital. Done? Debit side items all done. Then we come to credit side. Discount received. Income comes here. Returns outward. Purchase return. We left space for that. Now here you should immediately, as soon as you write the returns, you should subtract from the purchase and put the amount here. So that you will not miss it while totaling. Then you have sales. Okay, put sales here. Sales minus sales return gives you net sales. Bills payable. Bill PP is bills payable 3,000. Current liability. You need to pay them. Even sundry creditors, you have purchased from them on credit. So short-term liability. Creditors for rent. Now see, creditors for rent meaning we have not paid the rent till now. Therefore, we need to pay that. It's a liability. An expense of this year, rent is an expense, but if you have not paid the expense of this year till now, till the end of the year, 31st March, it becomes a liability. Something that you had to pay, but you did not pay. So creditors for rent will come here. It's not an expense, we will not put it here. It means that already rent has been adjusted here. We have added that to rent. The adjusting entry is passed. Capital. 40,000. Then loan from X and commission. Loan from X, again a liability. I have put it here. I don't know whether it's a current liability and it will pay off early or you have taken for a long term. So it's somewhere between the capital and current liabilities. And commission is this. On the credit side, so commission received, income, right? Now, closing stock, I told you will take in both places as your current asset also and as an adjustment for the purchase. After you have done all this, after you put all the relevant items from the question here, we need to total up things. Now we will see this side is more, so we will total up. If this and this are added, we get this 1,17,130 credit side total. From there, I subtracted 1, 2, 3, 4, all these figures. And this is the balance coming. So this balance is my gross profit. Why profit here? Because this is my income side, this is my expense side. Income is more. That is why this balancing figure is coming here. So you will write here to profit and loss account. Gross profit carried forward. You have to write here profit and loss account. And again bring down this. So this you have closed it. Trading account is closed like this. Please don't forget to write the total and close it. Bring down. This is coming from which account? To this is the profit and loss account. It is coming from the trading account. Gross profit brought down. Same amount here. So this gross profit plus the income, other income is coming to 46,620. From there, we will subtract the remaining expenses which we still not have debited. So all of this from here to here I subtract, and I see that again this side is falling short. So this falling short, this amount, this deficit is put here. So this will be your net profit. So this will be transferred to capital, isn't it? Overall profit is transferred to capital. So I add it here. Net profit. Alright? Now you will add capital and net profit and you will subtract drawings because this is a less reduction, and then you put this here. Alright? So this comes as the total. This is your closing capital. Clear? This is your closing capital. Then, this done, no more calculations left, just total up all of this. And your total will come to 86,420. Then you will come here, you will total up all assets, your total comes to 86,420. Your balance sheet has tallied. That means correct, right? So, the pleasure of balance sheet tallying, let it come to you every time you solve the sum. Okay, if at all, suppose your balance sheet is not tallied, the probable, checks. Closing stock have you taken in both the places? Then you quickly check from your sum, have you just put every amount correctly or not, and did you miss out on any amount by any chance? That done, then you will have to just check the totaling once. It happens, Calculators don't help you very much at times. So that can happen, don't get bogged down. Do that. If at all you have any problem, children, you can also put a comment in the comment section, and please practice well. Thank you so much for watching. Take care.